Good evening, everyone. Welcome to the channel. Today I am going to talk about Swhy interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Shenwen Hongyuan Group Co., Limited, offers a wide range of financial products and services across various segments. The company's key offerings include financial advisory, equity financing, debt financing, securities and futures, brokerage, margin financing, and securities, lending, stock-backed lending, investment advisory services, prime brokerage, proprietary trading, research, and consultation services, trading of fixed income, currencies, commodities, equity and equity-linked securities, sales, trading, hedging, and OTC derivatives services, asset management, mutual fund management, private equity fund management, securities, underwriting, wealth management, risk management, investment, research, corporate financing. The stock price of Bharti Airtel Limited has skyrocketed in the past year due to a combination of strategic initiatives, robust financial results, and advancements in network security. The company's anti-fraud initiatives have been particularly effective, with a 68.7% decrease in financial losses and a 14.3% drop in cybercrime incidents on its network. Bharti Airtel's strong financial performance has also contributed to its success, with a 168.01% increase in consolidated net profit in the quarter ended September 2024. Additionally, the company's strategic investment in BT Group plc is expected to foster synergies and open new avenues for growth. These factors have boosted investor sentiment and driven Bharti Airtel's stock price to reach an all-time high of Rs 1,652.65. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth drivers. 1. Diversification into new business segments, such as enterprise finance and institutional services. 2. Expansion into high-growth areas like index funds, cross-border wealth management, and financial technology solutions. 3. Increased market demand driven by falling domestic financing rates and rising market participation. 4. Effective play of intermediary roles in gatekeeping and service provision. 5. Improved business models and optimized portfolio allocation. Revenue decline drivers. 1. Decrease in interest income from financial institutions due to changing market conditions. 2. Shift away from traditional revenue streams, such as scale expansion, towards more competitive and quality-driven services. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture of net income and profit margins for the company. Initially, net income increased by 7.96%, page 25, and then surged by 44.32% to RMB 0.011 billion, page 36. However, there is an inconsistency in the data, with a decrease of 18.3% reported on page 214. Profit margins also showed varying trends. While they increased from 10.48% to 25.49% overall, page 25, some segments experienced declines or inconsistencies. The enterprise finance segment's profit margin decreased from 23.71% to 53.18%, which is likely an error due to its implausible increase. On the other hand, personal finance and institutional services and trading segments saw increases in their profit margins, page 25. Although profit margins are not explicitly stated on page 36, various factors imply that they continued to rise. The company's efforts to expand asset classes and profitability also suggest an upward trend in profit margins. The company is indeed generating positive operating cash flow. This is evident from the financial summary, which states that the company has a net cash inflow from operating activities of RMB 19,761 million. Additionally, the operating cash flows before movements in working capital are also positive at RMB 7,647,540. Furthermore, the cash generated from operations and net cash generated from operating activities are both substantial, indicating a strong ability to generate cash from its core business operations. Overall, these figures suggest that the company is successfully converting its profits into cash, which is a key indicator of financial health. The company's debt level has undergone significant changes over the years. While there have been instances of decreases in specific categories, such as short-term debt instruments issued and long-term bonds, other categories like loans and borrowings have seen substantial increases. The total non-current liabilities increased by 7.72%, and the total debt level rose by $149,647. On the other hand, interest expenses have generally decreased, with a notable drop of -8.75% in some instances. However, there are exceptions where interest expenses have either remained unchanged or seen minor increases. Overall, while the company's debt level has increased, its interest expenses have largely decreased. The company's financial performance varied across different segments and regions in the recent period. Notably, institutional services and trading, as well as investment management, demonstrated strong growth of 7.67%. On the other hand, enterprise finance and personal finance experienced declines of -7.28% and -4.18%, respectively. These contrasting results highlight areas that require improvement and those that are driving success for the company. Management is optimistic about the company's outlook and strategy. Key highlights include: the company aims to build a first-class investment bank through three main lines, driving business transformation and gathering development synergy. It will continue to implement national strategies, focusing on its core responsibilities and businesses, while maintaining growth resilience in the second half of 2025. Management has identified 5 priorities for the second half of 2025, including upgrading the business model and increasing investment support in key areas such as technology and green finance. The company will prioritize value and long-term investments, consolidating cash flow and reducing portfolio income volatility. A robust short-term and long-term financing system is in place, with significant financial assets at fair value. Management plans to strengthen its international business layout, RMB internationalization, and functional positioning as a service provider, gatekeeper, and manager. The company has a history of paying dividends to its shareholders. According to the financial summary, dividend payments have been made in various years and amounts, totaling over RMB 17 billion in some instances. The most recent dividend payment was reported as RMB 1,577 million in 2024. In contrast, there is no evidence of share buybacks by the company. There are concerns about inventory buildup or supply chain disruption. However, recent data suggests that these issues may be decreasing. A significant decrease of 56% in inventory levels from the previous year indicates a reduction in potential disruptions. Nevertheless, impairment losses attributed to litigation for some inventory contracts remain a concern, highlighting ongoing challenges in managing inventory and supply chains. That concludes the financial summary for Swhy. Feel free to comment below, and I will be happy to answer them when possible.